Welcome to All That Matters, a conversation show about what's happening in the world of investing, financial markets, and wealth management. My name is Ross Mayfield. I'm an investment strategy analyst here at Baird, and I'm thrilled to be joined by my friend Michael Antonelli, a market strategist with the firm. Today, we're going to discuss hype cycles versus fear cycles. So we see this all the time in markets, and that's really because markets are driven by behavior. It's driven by humans. And so you get these big euphoric booms and these kind of deflating busts and fear cycles. So we're going to talk about that. I want to start with AI. So speaking of humans driving things, AI is the big conversation in markets right now. The hype has driven markets to, year-to-date highs, but the fear is there as well. So Mike, I want to turn it over to you. Start 30,000 foot level. What your take on AI is in June 2023.
Yeah, Ross, great to see you. Great to see everybody else here with us. AI is the main topic that I've been asked about at client events recently. What is it? What could it be? Will it take jobs away? Let me give you my 30,000 foot view on kind of both of those things, and then let me know what you think about AI, Ross. What could this be? Just a massive productivity enhancer for a society, for an economy. Remember, an economy and therefore a stock market is just basically like how many people are working times what they produce. Right? That's kind of what is an economy. So what they produce is important. What's their productivity? That could be a big, big boost. AI could be a big, big boost. Let me just give you two quick examples. My wife's a real estate agent in the town we live in, and she gets a listing for a home, and it's a nice 4-bedroom, 3-bathroom colonial brick home. And she goes into ChatGPT and she says, write me a listing for a 4-bedroom, 3-bathroom colonial brick home at this location. Keep it to 50 words. And it just turns it out for her. So now all of a sudden she has this like digital assistant, which, Ross, it's just really fantastic. And then Adobe, a public company that has this program called Photoshop. It's a really hard to use program. Graphic designers use it to make cool pictures and stuff like that. But, if you had a picture of a bike rider and you wanted to put them into a field or on the Tour de France, you'd have to find the pictures and work it through. Now you just go into a box and you say, put this rider in a field, put this rider in the Tour de France. Productivity just instantly soaring. It's like an instantaneous thing. So, Ross, what could it be? This really massive productivity enhancer, right?
Yeah, I mean, we all have those, no matter what our job is, those little tasks that just take time. They're annoying. You feel like you should have a better way to do them, but you just don't yet. I mean, I think about, we're in finance. We work in Excel a lot. We're making charts or data, whatever it is. And if you're stuck in Excel, you just go to ChatGPT or whatever it is and say, write me a formula that does X, Y, Z, use it for these columns, these rows. And it spits it out. I mean, it's seconds later, and it works, with really close to 100% of the time. So every field, whether it's in a factory, whether it's in white collar jobs, I mean, I think that's where the big focus is. But we all have those little jobs that can be enhanced by something like this. And so I think it's going to be a major boon, long-term productivity.
Yeah, I completely agree. And will it take jobs? That's the question kind of everybody thinks about. So let's step back into history, Ross. I'm a history guy. Let's just step back into history for a second. In the mid-1800s, about 60% of workers in the United States worked in agriculture. Now it's 3%. In the mid-1960s, about a quarter of our population worked in manufacturing. Now it's less than 10%. What happened to those people? Are they unemployed? No, new jobs were created. New roles were created. And that is likely what's going to happen here. I tell interns and my kids and any young person I can talk to, the job you're going to get probably doesn't even exist yet. YouTube influencer was nothing when I was growing up, and now they're everywhere. Right? There will just be new jobs. And just one more, Ross, before I want to get your take on this. In the 1970s, the ATM machine was created, right? People thought, well, there's going to be no more bank tellers. Bank tellers are gone. It just improved bank profitability. It lowered costs. It increased quality. So by the time that ATM machine was widely adopted, there were more bank branches because it made it cheaper to open a bank branch. It made it more efficient, and there were more human tellers. So the notion that technology takes away jobs is not proven out by history. Ross, what do you think?
Yeah, I agree. I mean, could it be lumpy along a transition? Almost certainly. I mean, that's the case with all of those other big transitions throughout history. But there's this fallacy or this idea that there's some set number of work to be done in the world. And that's not the case. It's new technology creates new jobs, new opportunity. You talk about YouTube influencer. I mean, think about social media manager. Every company with more than 10 people has a social media manager. I mean, you need to have one.
Yes.
And that job didn't exist 15 years ago. So anyway, outside of the hype around it, and there is a lot of hype, it does feel a little bit bubbly, when you get CEOs of companies that have nothing to do with AI talking about AI on their calls. that's kind of like the crypto from a couple years ago. It's the same idea, but it also feels a lot more real. So I want to get your take on, if a client asks you how to invest in it or what your investing ideas were for that sector or for that theme, what would you say?
Right. I definitely get asked that a lot. Certainly that, again, that's a top client question. Like, hey, if this is a thing, how do I participate? How do I invest in it? What I'm saying right now is that I believe that the effects of AI are probably overstated in the short run, and they're probably understated in the long run. Right? We're probably putting too much hype into it at this very moment, considering it just showed up. But in the future, it's probably going to be something big. So there's really no great pure way to invest in this. What most people are doing is they're just kind of investing in big tech companies. So what I would say is that if you have a big, broad, large cap mutual fund, you probably already are benefiting from this AI tech kind of mini boom, if you will, because all of this stuff is kind of flowing to the large tech companies. But in terms of just like what's the purest AI play, those really don't exist yet. So Ross, I would say you probably already are benefiting it by just by what you already own in your accounts. But I would be certainly circling up with my team, circling up with my advisor and saying, is there anything that I should be thinking about that I'm not thinking about? They mentioned I already own some in a large cap tech fund, but is there anything else I should be thinking about? Ross, what's your view?
Yeah, I mean, I think that's just it. I mean, the biggest companies, we spend a lot of time talking about this narrow market. It's just these big tech stocks. Well, if you own that narrow market, you own all of the AI innovation at this point. And I would also just say, like, a big theme like this, internet, smartphones, whatever it is, the winners are companies that probably don't exist yet. So you think about, Netflix or Amazon couldn't exist until the internet was created. You think about Uber couldn't exist until 4G in the smartphone. So we're in such early stages. I think you're right. Near term, probably overstated. There is a little bit of hype and it's a hype cycle, it's getting a little bit bubbly, but long term, probably understated. And I think the companies that are going to be the big winners, a lot of them don't even exist yet. Right. So, let's pivot quickly. I want to put a bow on the debt ceiling. And I think the best way is to kind of mirror that to a hype cycle in AI, which is a fear cycle. And we just went through one. It was plastered all over the news for weeks and weeks and weeks. And it was a non-event. The market barely shrugged. A deal got done with plenty of time, way quicker than people thought. Just generally, how do you think about this sort of thing? Because it has happened a million times. It's going to happen a million more, whatever it is.
This, Ross, is like where I'm trying to make the core of my career. Honestly, like there's always something to be afraid of. That's something I try to relay to not only family members, but our clients and people I interact with. There's always something that's in the news, always. Debt ceiling, dollar losing its reserve currency status, central bank digital currency, all these things come and go. They're very, like Ross said, cyclical, right? They show up and then they go away. Then they show up and they go away. You have to understand in terms of being an investor, there's so much noise in the world. And it gets pumped into you endlessly by news and social media and your friends and all these things. You have to understand that not everything is a signal. You have to kind of comprehend the fact that if it's being talked about on the news, on your TV or on your phone, then the market already knows about it. Like the debt ceiling thing, the market, honestly, it didn't even budge the whole time. It didn't even fidget. It didn't even give it a second thought because it knew it was going to be resolved. So you have to kind of look at the news and say, is this something that I really, really think impacts not only me, but that nobody else knows about it, that it hasn't been being thought about? Like nobody's priced this. Ross, you probably hear the same thing, right?
No, totally. And that's the big thing I wanted to say. It was a point that I've heard you make 1,000 times. The big risks are the one that the market is not thinking about and is not prepared for. It's a novel coronavirus, and a global pandemic. It's Russia invading Ukraine when 2 nights before everyone was saying it wasn't a possibility. These things that are true black swans are the risks, but the things that we talk about ad nauseum over and over that are plastered on the 24-hour news cycle, it's not that they can't be risks or things can't go wrong, but they're not the big risks and they're not the ones worth really lending, thought power to. So, we got through it, these fear cycles. Again, you mentioned dollar. We spent all of April talking about reserve currency, de-dollarization. I haven't heard about it since.
It's gone.
It's out of the news and it's gone. So yeah, just something that investors have to be ready for. I'm glad you're making your career out of it because we need someone on the front lines, and I'm glad it's not me. So,
all right. Well, let me just wrap up kind of this whole video and say that we talked about hype cycles, AI. We talked about fear cycles, the things you see in the news that come and go. Remember, life is in the middle. Life will always be in the middle. There's these ups and downs. We kind of live our lives in the middle where something gets too hyped up and then you get too afraid of something. And that back and forth is just life. You have to learn to kind of cope with the fact that A, the world's a scary place, but B, there's lots of exciting things that happen just like under our noses, like right in front of us. AI could be something super, super, super important. I don't think it's going to be Terminator 2. I don't think this is going to like take over humanity. I think this is going to be a massive productivity tool, Ross.
Yeah, I totally agree. I mean, like I said, it'll be lumpy along the way. The volatility in the markets reflects all of this noise. You know, it's the day-to-day volatility is that noise, but it's not important for the long-term investor. It's as we say a million times, it's the price of entry for the long-term gains, you know, and the long-term gains that will accrue from an AI productivity boom. So I think it's worth keeping in mind. We'll be back again to talk about it more. We'll keep hammering this point home because I think it's the most important thing for our long-term investors and our clients. So anyway, Mike, thanks so much for jumping on. Really fun to talk to you as always. And we'll see everyone. We'll see everyone next month. Thanks again.
See you guys.